Morning, Steve Free in Chicago with the morning grain comments. Markets are a little bit better overnight, led by wheat. Kind of an oversold situation. Not a lot of new news in the wheat market. There was talk that maybe the president of China agreed to buy wheat from Russia in their recent meetings. There's also some talk that with French wheat futures sharply lower, China may have returned to the French market to try to buy some wheat for the reserves. Still weather-wise, too cold, too wet in the northern plains in Canada, too wet across parts of the south and southeast, and too dry in the U.S. hard red winter wheat areas. So there continues to be a little bit more talk about possibility of lower HRW crop, maybe lower HR spring planted acres, higher prevent plant acres, and but still that is not really offering support to the wheat market that continues to see increased managed funds selling because of maybe the lack of demand or just the lack of wanting to be long commodities in these uncertain financial times. The corn market, nearby May corn continues to gain on July. July continues to gain on December with increased export demand and not a lot of farmers selling. It's interesting that in the corn market in Europe, Matif corn futures continue to slide lower with farmers selling very large stocks of last year's corn crop, almost panic type selling, as it looks like they're going to have a good 2023 corn crop so far. It is interesting that our weather guy put out a special report today that talks about the PDO, negative PDO, and the chance that later in 2023 we could see a drier trend across parts of the U.S. Midwest. It's a long way away, and we're not going to trade that right now, but we do see managed funds short wheat for the first time since August 2022, and maybe the first time ever before this crop is even planted. Over in the beans, we continue to see weaker Brazil premiums, which was offering resistance, especially to meal yesterday, with a $50 a ton drop since March 7th high. The only reason that we could talk about that kind of a drop in meal when the Argentina crop is smaller is if there's just a reduced demand for meal. Crush margins continue to decline in China, here in the U.S. board, and also in Argentina. We do see a steep drop continue in rapeseed and canola oil prices globally. Palm oil is now lower. So the soybean oil futures market is actually in a bear market. And that could also be offering some resistance to the beans. So we'll watch export sales, getting ready for the March 31st U.S. acreage and stocks report, and the markets are still considered choppy and a little bit of bearish because of uncertain demand.